Welcome to TheoTrade. This is Don Kaufman, September 26th, 2025. Minutes to go to the cash close here on this Friday afternoon. The S&P's up some 34 handles, but people, some two-sided trade is finally starting to break through in this marketplace, and it's got the trading community a little bit on edge right now. It's got everybody asking the question, you selling the rips or you buying the dips? Of course, we're going to cover that and much more here on this TheoTrade weekend update. Let's get right into it. Stating the obvious here on this Friday afternoon, yeah, markets, they're a bit higher this morning, but you can see right off the bat, the NASDAQ, okay, which I'm highlighting on my screen, is weak on a relative basis, right? So the NQ is slightly underperforming. I'm going to go more into that in just a few minutes, but it's one of the standouts that it really does kind of have the trading community on edge. The other aspect, as I said, there's a breakthrough, if you will, of some two-sided trade. And what that just basically entails is exactly what it sounds like. What's a two-sided trade? That's markets that go higher and lower. And that's the kind of price action, people, if you trade, okay, this is what we live for. Because two-sided trade, I mean, you're putting on trades, you're taking them off. It's not about being right or wrong. It's just being in there. And what has evolved from complete one-sidedness in the last couple of weeks turned into some sell-side activity. But I mean, this morning, you had a wild bid under the marketplace after PCE data. There you go, filling my trades. You had some a wild bid under the marketplace after the PCE data came out. Nothing crazy to discuss there. PCE data, that's the Fed's inflationary indicator of choice. That came out kind of as expected, but the marketplace had a strong bid off of it, okay? Then a dramatic fade. I mean, pretty much bell goes off, S&P start to sell off. We rebound again, but the rebound is rather meager because the NASDAQ, again, is weak on a relative basis. And that, okay, is one of the biggest takeaways, because what do you have right now? Like, don't worry, the financials will save us. I got better than that. Maybe it could be the energy sector. It broke out to the upside. Yeah, it broke out to the upside, but far be it for me to say this. That could be kind of a key reversal, like, right? Thing explodes to 93 and actually reverts back down. I mean, what to say about this marketplace? Things are getting a little bit crazy out there in a hurry. And again, that's exactly the kind of trade that I like to exploit and have exploited throughout the course of this week. So let me start with a little bit of bigger picture before I start getting wild into correlations and the NASDAQ underperformance. Bigger picture first. Let's go to the SPX. Inside of the SPX, as I kind of stated, you know, the markets earlier this week, they started off with kind of a bang to the upside. And I'm not one to be like, you know, too much backward looking. They start with a bang to the upside. They completely reverse on Tuesday. There's, you know, fairly meager price action though. The days were kind of one-sided. Obviously, a little bit of sell-side activity kind of bleeds through on Wednesday, and all of a sudden, coming into Thursday, let's get crazy. We hit the lower edge of the expected move, which in the SPX is 65.80 on the button. There's some reversion back up today, but net, the S&Ps will finish the week. What I would term, this is not unchanged, but it's marginally lower. Now, am I excited about that? That's not what I'm excited about. Okay, oh, they're lower. This is not about being bullish or bearish. It's about the return, again, of two-sided trade, the return of volatility. And when you're looking at the screen, you're going to be, oh, the return of volatility. Please, Don, the volatility got crushed. The VVIX got crushed. I'm very well aware that the VIX got crushed back down today. Okay, the VVIX, check out the VVIX. That got crushed back down today. So all of a sudden, everybody's like, okay, you know, put away weapons and ammo. We're just going to kind of mellow out again. And yet, I don't see it that way. And that's one of the keys that I want to start with is I don't want to be backward looking. forward looking, there was a critical change this morning. In fact, we even sent out an email to this effect, and that had everything to do with considerably higher degrees of correlation. So coming down to it, at one point this morning, you actually had, and I was talking about this in the Wednesday night video, but you actually had 90 products to the upside, basically 10 to the downside. And that is it. That's the sign. Okay, the sign of what? Now we're going to start to open things up a little bit. This is not necessarily like, rotate. And the rotations have been to XLF. So we go into the XLF, we're out of, for instance, NASDAQ. And if we go into the XLF, we're also pouring money into the XLE. And we're still seeing some of the effects of that, okay? But that high degree of correlation, this morning, we hit 90 products to the upside, but the marketplace still, okay, dropped like a rock. All right, why? Tech, okay? Tech couldn't get out of its own way and started actually, a handful of tech stocks started actually backsliding and sucking the marketplace back down. There was a degree of a recovery, okay, but it's on right now. That degree of correlation, okay, is like the signature, if you will, for the return of some two-sided trade. We're going to have to see early next week if it continues. Again, it's a glimmer of hope. But as I was saying, there's products like the financials, right? I'll go through a couple of sectors over here. The financials will also end the week just marginally lower. The energy sector, explosive, okay, breaks outside the upper edge of the expected move, but it contracts back. Now, what do individual tech stocks look like? Because this is what I started to find interesting. There is breakdown, okay, all over. I'm starting, okay, with what is positive on the week. Apple, okay. Apple actually catches a bid really, okay, last week, continues on that theme. Apple is going to close to the upper edge of its expected move. So there's your kind of stronger point. Microsoft, let's come to Microsoft. Gets hammered out of the gate this week, lower edge of expected move. Amazon shatters lower edge of the expected move. Google, okay, right at the lower edge of the expected move. Meta shatters the lower edge of its expected move. Nvidia, something's got to be good over here. Nvidia will end the week marginally higher. Generally speaking, this is massively unchanged. And then we have Tesla. Tesla has had a wild week. It's a day up, it's a day down, it's a day up, day down. It will finish the week higher, okay? But at points, even today, was marginally lower. Then we come to Broadcom, lower edge of the expected move, okay? There's been a bit of a break, again, in a number of key areas in the marketplace. And obviously, NVIDIA, if you look at the technicals in NVIDIA, you got nothing to go on in here. For the most part, it's been flat. You're probably thinking, there's still the possibility it can still break to the upside. I would agree, okay? I would absolutely agree. But I was saying this earlier in the week, okay? And that is, deals have been done. Tariffs are going to be discussed this weekend, which could spark some volatility. But when I say, NVIDIA, deals have been done in terms of AI, all right? You've got all of a sudden NVIDIA investments in Intel, Apple possibly investments in Intel, chip tariffs possibly being passed down. But the big one, of course, is like OpenAI. NVIDIA, by the way, is throwing money everywhere. NVIDIA is throwing money into OpenAI. They're throwing money into, obviously, Intel, okay? But the big one is OpenAI, okay? And Sam Altman's starting to talk about $5 trillion of investment in the next couple of years. And, I use the term like, this is Fonzie, jumping over the sharks on water skis. It's, that's it. Where is the upside from here? And I'm sure you can make a great fundamental argument for NVIDIA. But the point I have is in the near term, okay, the best of the greatest news ever in $5 trillion in spending, it's already out there. And even with that discussion in play, you still have NASDAQ underperformance, which brings me to my next point over here. I'm going to bring up the QQQ and bring up its auto expected move. The NASDAQ is also marginally lower on the week. Now, it's not breaking down. It's not falling apart, but as you saw, some of the key players, and that's why I wanted to cover some of the key players, specifically stuff like Broadcom, it's one of the hottest things. You do realize that Broadcom, okay, this is 2 weeks effectively straight down. In fact, okay, Broadcom, for those of you that are a little bit more into the technicals, it's hanging on by a thread. This is a technically critical level. You can say breaking under 330. This thing is a wide open, door to the downside, huge trap door to the downside. And that's something that if it does start to break through 330, okay, could be an ugly road. For right now, we've stabilized to a degree. We have actually stabilized. So as I said, yeah, we're finishing the week, okay, higher. We're finishing literally with 30 seconds to go to the cash close. We're finishing the week, on a little bit of a positive note with the S&P is up some 37. Ironically, today's expected move, specifically today's expected move, was $40, and that's basically where your SPX is going to close, up like $40. That was to be expected. As I said, though, okay, the markets are just marginally lower. Okay, neither here nor there. The trade, okay, has definitely shifted, and you're starting, as I said, to see some breakthrough of literally. That's it. There's the closing bell. It's all over, people. It's all over. But you're starting to see this breakthrough of like some two-sided trade, even products like Meta, okay? Products like Meta breaking through, okay? And also at a technically critical level in and around 750. It's effectively closing below that. Door could easily be open to a 700 print in the coming days inside of Meta. I'm not all bared up with no place to go, okay? I am slightly excited, though, about the fact that we're having trading sessions that are having highs, lows, back to highs. As I said, that is all you can ask for, okay, as a trader. Now, in a larger sense, let's come to a 180-day 4-hour chart, okay? Zoom in on it for a second. And I want to come in here and also do what's called contract adjust. So you go to futures, you go to adjust for contract changes, hit apply, hit OK. Just to give you a feel, okay, kind of freeze the screen here for a second, just to give you a feel of kind of where we are. So we had this, kind of stellar 200-point range for a considerable period of time. We pop outside of it. We're still significantly outside of it. We're still a stone's throw off the all-time high, okay? But again, that glimmer of hope of two-sided trade is there. If the S&Ps next week, okay, are to start to pull back, let's give some really specific levels. If the S&Ps are start to pull back, okay, the levels that you're kind of looking for is a break anywhere down in this neighborhood here, which is like 65.50, starts to become a fairly critical break. Now, we're now, more than a hop, skip, and a jump off of that. But as you saw this week, we went from fairly mellow to a fairly precipitous sell-off. Anyway, I wouldn't be surprised at all to actually see, again, this continuation of two-sided trade, as we also had, again, significantly higher degrees of correlation. And that correlation, you're like, oh, who the hell cares, man? So what? We're correlated, okay? It's no longer, okay, with, this let's go from the QQQ and we'll rotate out to the XOLF and then we'll move to the, okay, we're not moving, counter back and forth anymore. What we're actually doing is everybody's on one side of the boat. And when everybody starts getting on one side of the boat can flip over very, very quickly. And that's actually, by the way, the kind of the analogy I give you, but that's the rationale when I look at it. And that's starting to move, okay, much more cohesively. That's one of the most important things that traders kind of miss. We've been in like this 50-50 advanced decline line. Let's get crazy. We saw some big down days even last week, briefly, post-Fed, but we saw some big down days. But the truth is, it didn't have the correlation factor with it. So you can have 90 advancers and all of a sudden the market starts to slip and 90 advancers becomes 90 decliners and you're down like, 2% a given day. And that's the kind of marketplace that we've entered into, is the rotations kind of cease to exist. And we start seeing, again, higher degrees, as I said, of correlation. All right. So high degrees of correlation opens up two-sided trade. NQ, underperformance, specifically today. Not a drastic underperformance, but you have to read through the tea leaves over here. The NASDAQ It is the marketplace. It's the only thing that has actually taken the S&Ps really up this year, and most of the performance year to date in the S&Ps. Let's go to the S&Ps, up 13% year to date basis. Almost all of that 13%, okay, is technology. You can make some arguments, yes, but the financials are up 11%. They're actually on the lagging end of this. But the energy sector can't get out of its own way. The energy sector, like earlier this week, was massively unchanged. Breaks to the upside, but possibly reversal. It's only up 6%. Okay, it's tech all the time. As I already stated, though, AI, okay, is becoming and again, this is just my opinion, overcooked turkey. As I said, it's Fonzie jumping over the shark at this point. It's going to be difficult to sustain that. The other aspect that really started to resonate with me, and something I've been mentioning for the last 2 weeks, okay, Bitcoin started to actually threaten some lower levels here. And I say 2 weeks because I actually saw some significant sell side activity in here start to permeate into last week. But what do you got in terms of crypto? Crypto at an absolutely critical level of 110,000. Now, you come into this 110 level inside of crypto, okay? This thing could be wide open to 100,000. You start getting below 100,000. Why is crypto, though, so instrumental to the understanding, okay, of the S&Ps? Because crypto, the same people that are trading crypto, specifically Bitcoin, are the exact same people, okay, that are actually trading high beta tech stocks. How do we know that? Examination of order flow. Still have a lot of friends in this business, a lot of friends that run firms like Robinhood, a lot of friends that run firms like, well, okay, Charles Schwab, a lot of friends that run firms, okay, like Tasty. So we're seeing some of the order flow, and we're discussing some of the order flow kind of behind the scenes. And the reality is, retail traders that trade in Bitcoin are also in high beta stocks. So if you start to see sell side activity in crypto, specifically Bitcoin, you're going to see sell side activity in some of the higher beta stuff, which is going to bleed into, again, some of the big tech stocks. Makes sense when you start seeing a little pressure into Broadcom over there. And Broadcom only has like a 40 vol. Makes sense when you start looking at stuff like NVIDIA. Okay, NVIDIA, though, hasn't cracked at all. Okay, NVIDIA hanging tough, obviously. Bitcoin throughout the course of this weekend and early next week is going to play a critical role there. So cracks are forming in crypto. Okay, where are we going into next week? Well, before I go any further and start talking about some trades, I also just want to mention briefly the bond market. Okay, bond market starting to slip a little bit more. And if you're more comfortable, you can look at the TLT. So the TLT, okay, it's massively unchanged on the week. But interest rates, okay, they're not going down like everybody kind of assumed. This is also, okay, some further pressure to the marketplace. And we start talking about interest rates. I like to look at the 10-year. Does this look, okay, like the 10-year? Does this look like interest rates are falling? Because I keep hearing like, oh, the mortgage rates are really good out there. Except, again, we continue on this upward momentum specific to the 10-year. There's upward momentum in here, but interest rates starting to break out. Obviously, there's also going to be discussion of government shutdown. I'm even pushing that aside for a second because volatility doesn't display anything. Okay. Speaking of volatility, again, crushed down. I wanted to reiterate that. VVIX kind of crushed down. Volatility feels like it's about a step behind, though, what you're seeing inside of correlation. Okay. I had some positive trades throughout the course of this week. The SPX. Talk about the SPX for a second. I actually hit a butterfly in the SPX yesterday. I opened it for 55 cents, closed it, okay, for about $1.35 to 145% return. Caterpillar, I actually had a nice trade inside of Caterpillar. And by the way, if you guys are curious, want to see some of the order flow, Caterpillar, I actually opened that for 235, closed it for 305, 310 respectively. That was actually good for a 30 to 35% return. Obviously, the SPX trade in here, a couple of good scalps. One of them, which was in Citi today. So Citi, we caught actually the reversion back down inside of Citi, making over 100% on an intraday scalp. Dogs and cats living together. As I said, all I ask for in this marketplace is two-sided trade, and that's exactly what it's giving us. Last, but definitely not least, we cruise back to the SPX because the SPX, as I often call it, the mother of all products, the SPX today, pretty mellow day, right? You kind of feeling like whatever. We kind of just grinding a little lower, grinding a little higher. You realize the SPX did over 4 million contracts today. The spiders, okay, spiders are good for another what? 8.5 million. Okay, we're talking staggeringly large. amounts of option volume specific to these two products that are just nothing more, okay, than S&P. I mean, the amount of notional value in here is clear up. It's like 60% of everything that traded today is in the options, okay, of SPX and Spider in terms of notional value, staggeringly large, which again kind of brings me to the expected move. What are markets anticipating next week? So we just came out of a week. There's a couple of announcements throughout the course of this week, right? Okay, there's a few things, and PCE data came out next week. What can you expect next week? I'll tell you what. The expected move is very, very similar. This past week of trade, we had approximately, and I'm actually going to write it up on your screen right now. Okay, this last week of trade, we had about an $84 expected move. That means $84 higher, $84 lower. This next week, we're in the same exact ballpark, $85 of expected move. Okay. Now, for those of you like kind of uninitiated, maybe unaware, okay, there are going to be some volatility events throughout the course of this week. There's a couple of, announcements coming out. Obviously, there's still threat of tariffs over this weekend. That's going to be a discussion. There's government shutdown. Okay. One thing I will tell you though, net, when I look at an $85 expected move and an 11.69 vol, looks low, looks incredibly low for the kind of volatility that we just saw today. I mean, I know that the S&Ps are up some 40 handles today, which is exactly what they were anticipated to move. But we literally rallied 40 handles, sold off over 40 handles, rallied another 40 handles. People, as I said, that's volatility. That's two-sided trade. And that, people, okay, is what trade is all about. So coming into next week, okay, we're going to be answering that question all throughout the course of it. But coming into next week, really, the bigger question is, you selling the rips or you buying the dips? Two-sided trade has absolutely returned to this marketplace. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.